Hello and welcome to the Blockchain and Us, where pioneers and thought leaders talk about their journey in blockchain technology, crypto assets, and the token economy. And I'm your host, Manuel Staggers. If you enjoy this podcast, please give it a top rating and review on iTunes, and feel free to follow me on Twitter at Manuel Staggers. This episode is brought to you by Crypto Storage. Crypto Storage offers a proprietary solution to enable professional storage of crypto assets. The storage is secure both physically and digitally on the highest grade hardware security modules with detailed configuration possibilities for individual-based access control. To learn more, visit www.cryptostorage.ch. My guest today is Lidia Bolla. Lidia is the co-founder and CEO of Vision&amp, an asset manager in Switzerland focusing on blockchain investment opportunities. Lidia has also co-founded a machine learning startup, and before that she was managing partner of a Swiss advisory boutique specialized in quantitative finance. Earlier in her career, Lidia worked for major investment firms like JP Morgan Swiss Re and Man Investments in Zurich, London and Hong Kong. She has a PhD in finance from the University of St. Gallen and advises several blockchain startups. And now, to the interview. Hi, Lidia, and thanks a lot for making time today.
Hi, Manuel. Thanks for having me. It's a pleasure to be here.
So, Lidia, you have quite a long career in asset management, and now you work full-time in the crypto space. When did you make that transition?
That has actually been quite a journey till I got here where I'm now. It all started, I'd say, really early, before even going for my studies, because I've always been at the intersection a bit of finance, business, and technology. So even before starting my studies, I wasn't really sure whether I should do computer science or business or even law. So I was even at ETH looking at all the computer science classes, did a week, especially for women in computer science there, because they tried to get some more women in that space. I always loved technology. I always loved computer science. I somehow made the decision in the end to go for business. So I ended up in St. Gallen and made my business studies there. It was a really great time, but I always had this affinity, this love for the technology part. So I tried to do the whole coding myself. I developed my skills in some basic coding languages really early on and continued improving on them during my business studies. So I always had this combination of business in my studies and later on in my career with my love for technology and coding more on the personal side. And, I did that through my whole studies and ended up after my studies going to Swiss Re Asset Management and had like a really classical asset management role there. I tried to put in my coding skills wherever I could, but it was quite on the low end, so you didn't have to do a lot of coding there. That's also why I made the decision to do a PhD in quantitative asset management. So that's mainly mathematics combined with asset management topics. There you actually needed to do a lot of coding, and I could combine it with a job in the private sector, where we were advising corporates on financial models and help them implement financial modeling tools within their companies. So for me, that was the first job where I could really combine my asset management business skills with my love for coding. And it was really a great time. We did that for a couple of years. It was a really small company. I was leading it together with a partner, and we were able to build up quite a nice business there. And but I always had this love for pushing forward businesses and growing businesses. Having this small company for the first time made me realize how great it is to have an own company and be able to really decide by yourself which are the things you really like to do and which are the things you really think that they make sense to do.
Was there some kind of specific event that triggered you to start your own company?
So when I was at the previous company, which I didn't found, but I was co-owning it, we were always looking at those different tech projects, and I was involved really early on in blockchain topics as well. We never implemented them in our business we had, but I read a lot about the whole blockchain topic really early on. Not so much about crypto, though, really more in the blockchain technology topic. And when we decided to start our own company outside this company I was working in, we really looked at different business ideas. Actually, we had a long list of business ideas and made that quite systematically which business idea we want to start.
What was on that list?
A lot of things actually. That started with financial marketplaces for banking products, for example. So the whole API Payment Service Directive 2 ideas, where you could really access banks and their banking data and build technology to access this banking data and give users the possibilities to leverage their own banking data. So started there, went over media ideas. So for example, I cannot believe how the media industry is currently operating, that you do not have like more of a Spotify-like approach to media, that you still have your Answer abonnement and all those single subscription for all those different newspapers. So we're looking at ideas like that, and it's really a full range. And we made a list, we made pros and cons, and actually we had some blockchain projects on there as well. For example, one was the whole question when you die and you have all your financial assets, and if you could put that into smart contracts and let it distribute among your children and whatever, that was one idea as well, and put that on a blockchain. So things like that, quite a long list. And the crypto project, the crypto blockchain project we are doing now wasn't actually on that list at all.
Okay. When did you start thinking about these things?
Well, that was in like beginning of 2017, I'd say, when I left the previous company, and I sat together with my now co-founder, and we knew we're gonna co-found a company, and we just had to decide which one, because I think it's like the idea is a really important part in founding a company. But having the team is even the bigger part, I'd say. So for us, it was always clear we are a team and we are going to co-found the company. And so the next big topic was which idea. And we had a couple, but it was important to decide which one it's going to be. Yeah.
But you said the one that you actually went with wasn't even on the list.
So on this, while figuring out which idea to execute, so we were testing different ideas, and we still figuring out which idea to execute. And then because people knew we have some know-how in the blockchain and crypto space on the private, on our personal side, they started approaching us in 2017 because it started being a hype a bit. People came to us and asked us, okay, we know you are in that blockchain crypto space. Can you tell us how to invest? And we would usually tell them how they can invest in crypto specifically. And we told them how they can open exchange accounts, wallets, how they have to handle private keys and so on.
But your experience in that field, that was from your own, you were managing your own portfolio, right?
Yeah, exactly. Yeah.
And then you decided to make a business out of that.
Yeah. Because a lot of those people that asked us how they could invest in it, they came back and said, okay, I somehow see how I could do it, but it's too time consuming, or I don't really know how to do it, or I don't dare to do it. And I don't really know what to invest anyway. So we saw a lot of, quite a need for having someone professionally managing those crypto assets for others. Because he had those investors, traditional investors that really wanted to access this blockchain space, but they were just not able to do it.
And that's what you're offering now with your current project.
Exactly, yeah. So as we saw that was actually the need, we got rid of our list of business ideas and implemented that. The idea originally was to give traditional investors really easy access to the crypto and blockchain space. And we always wanted to give them an access that is really traditional. So it should be an access that they're used to, be it with an investment product or with a managed account setting. So tools from the financial world that are really well known to the traditional investors. But instead of investing their assets in equity or bonds of traditional companies, we would invest those assets in blockchain companies and to give them access to the technology. That was the original idea. Yeah.
And just to go back a little bit, you said you got into touch with cryptocurrencies, Bitcoin, I assume, very early. Was that during your PhD in finance, or when was that? Yeah,
so I got in touch with the whole blockchain topic during my PhD, yes. I got in touch with the whole crypto investing later on, but it was just like a normal extension because I was in the investing asset management space on the professional side and looking at the technology, at the blockchain technology on my personal side. So it somehow combined it to crypto investing as well at some point. But I came more from the blockchain space, yeah.
Well, did someone at the university, as a person who studied with you or a professor, tell you about that paper that just came out and that should be something that you should look at, or how did that happen?
No, it's actually it wasn't the university itself. It was just during that time. But I was reading a lot about fintech projects. I was reading a lot about startups in the fintech space. And at some point, blockchain popped up as a topic, and I didn't really know what it is. So I started reading about it, and I'd say I had a long time really getting it. So in the beginning, I read, and I always felt I'm at that point where I don't really get it. It's I see it could be it has big potential and could be big future ahead of us with that technology, but I didn't really get it. So I had to read a lot. I'd say like over a year, I read everything I could, and also more on the tech side because I didn't understand the tech fully. So I really had to read a lot to really get it.
You mean Bitcoin or the blockchain concept?
Just the technology, how it really works. I think, and I'm still at that point, where because blockchain technology is it's such a beautiful technology because it combines different industries, different sectors, and different know-how. And you're not knowledgeable in all those sectors. So you might know something about the economic parts of it, or you might know something about cryptography, but usually people do not know about everything. And that's also for me the issue. Cryptography, for example, I never had any education in it. So for me, that's really the part where I struggle most with understanding. So still now I'm reading a lot to get the technology until its core. I understand how it works and everything, but really understanding every technical detail requires a lot of time.
How do you stay current on all these developments?
It's difficult. I try to read as much as I can. Currently with building up the business, that's the thing that I miss most. You sometimes lack the time to read all those things. And you feel that right away then during when building up the business or when discussing certain concepts with other people, because it's evolving so quickly. You really have to stay, you really have to keep reading everything you can. And I usually use Medium articles. So I believe if you follow really interesting people there, and you have a lot of interesting articles and really new ideas which are shared there. Also open source kind of platform, and I really like diving in there. And
do you also write on Medium?
We are writing quite a bit research content, but we currently focusing on publishing it on our own website. So it's one of our main focus points, because we believe if you really want to invest in the blockchain space, you have to understand it. You have to understand the companies, you have to understand the technology. And we are heavily focused and invested in our research. So I'm writing myself, my co-founders are writing research reports and ad hoc reports. We're also writing a weekly newsletter summarizing the markets.
Which I get every week.
You're getting, that's really good.
Do you often speak with maybe your old colleagues from the traditional asset management sector about crypto assets?
Yeah, all the time. And I'm getting some strange looks quite a bit. So I was recently asked whether I'm not afraid of killing my reputation by being involved in the crypto space. Sometimes you just get the looks, and then okay, they're not really convinced about the crypto blockchain space, and think you're on the wrong track. Yeah, it's a lot of talking with people and really showing them some other sides, because people, especially in the traditional financial industry, are reading about the blockchain crypto space in more traditional media, and it often doesn't go deep enough in terms of know-how. So it's a lot of educational conversations we have also with traditional finance people, and it's always great to see when they change opinion. That happens not always, but it happens quite a bit, and that they're really skeptical and change opinion once you really show them what you're doing, why you're doing it, and
what are usually those winning arguments that you've seen, were very successful in maybe convincing people that this thing has legs?
One is around the topic of cryptocurrencies and stressing the currency part. So what we always hear is, I believe in blockchain, but I do not believe in cryptocurrencies. And I totally get the argument, but I think it's a wrong argument, because people only hear cryptocurrencies and they only hear Bitcoin. And what they usually mean when we talk with them is that they do not believe in the currency use case of blockchain. So they do not believe that something like Bitcoin could replace a US dollar or Swiss francs. I do not believe that either. I do not believe that it's going to replace the Swiss franc or the US dollar. And then we usually show people that on one side, the currency application has certain use cases they didn't think of. So, for example, if you are thinking in not Western world standards, but more third world country standards, that there might be a reason to have an alternative currency system, or that millennials, for example, are probably not going to hold their 5% gold allocation, but something else. Then they start a bit believing in the currency use case as well. But the much bigger part is even to show them all those blockchain use cases, which are not currencies, but are still called cryptocurrency. And once they see that, once they see all those applications, all those startups and projects that issue crypto assets, and we always call it crypto assets, just to stress the fact that not all that those are not currencies all the time. If they see all those blockchain projects and see they're not currencies, they start getting that the whole thing is much bigger than just the currency use case. It's one thing how they are structured and how they are classified legally. It's another thing what the use case of the project is. So as an example, we usually take Ethereum and Modum. So Ethereum, for example, classical cryptocurrency in that sense. But the use case of Ethereum is not building an alternative currency system as it is for Bitcoin. The use case of Ethereum is having a blockchain platform and giving that platform to developer to build applications on top of it. And obviously Ethereum Ether is used as a currency to pay to use this platform. But when you're holding Ethereum, then you're going to profit the more people have demand for this blockchain platform. So basically what you're holding is not just an alternative Swiss franc or US dollar, but what you're holding is an asset that grows in value if the demand of your underlying blockchain platform grows in value. So it's something totally different than a currency.
It's the whole point of owning the network.
Exactly. Yeah, exactly. Yeah. But maybe the other on the legal structuring side, the other example we usually bring is the Modum example, which structured their crypto asset as basically as an equity. And so if you're holding the crypto asset of this startup, and the startup is issuing dividends, the dividends are not issued to the shareholders, the equity shareholders, but to the token holders. So when you're holding this crypto asset, you are basically invested as really similar to if you would hold equity. So that's also something totally different than a currency.
So how do you go about developing investment ideas?
For us, that's actually not really really fancy or modern or anything. That's really traditional, actually, because we believe in the fundamental value of certain blockchain projects, and that's why we are investing in those projects. So we are not doing some fancy quant arbitrage, high frequency trading strategies. What we are doing is we really look at the different projects out there, at the companies, at the foundations, and those projects that we really believe in, we are investing in those and we hold them long term. Mm-hmm. And that's really traditional. So we look at the teams, we look at the ecosystems around those projects, we look at the technology, we also look at things like regulatory risk, which is a really important part in the investing world. Or we look at, which is really specific to now the crypto blockchain space, is at the monetary design of those assets. So what's the inflation, are there tokens that are issued, and so on. So it's really traditional in the sense that it's venture capital-like. We look at businesses, we look at whether they make sense fundamentally, and invest in them long term.
Mm-hmm. I mean, you have the traditional background. You have this finance PhD. You have a CFA as well. Which skills do you think are very different to be successful in managing crypto assets than in traditional finance?
The technological know-how, because all those companies are somehow tech based, or at least the ones we are investing in. You really need to have the understanding on one side how the tech works, and on the other side whether there is a business case for that technology. So it's tech understanding and applying the tech understanding to the business world, and that's something you might have it in the traditional finance world as well, especially if you are involved with tech stocks and things like that. But usually people in the asset management industry, for example, are not coding, or they are not don't really have to be that tech savvy to invest, and that's the main differentiator to what we are doing.
Mm-hmm. But still, the traditional finance sector is quite interested in crypto assets, and they do want to invest, right? I mean, do you see there is kind of a gap that they have difficulty bridging?
I think they're starting to bridge it better over time. And not everyone needs to have the tech understanding. So you can have partners that have that understanding, mm-hmm. that can consult, that can advise you. But yeah, you're right. We see the interest of the traditional financial industry to get access to the space. Some especially the bigger institutions are more reluctant towards the whole crypto topic, and really just look at the blockchain technology and how can they use it internally. And some institutions really see the connection of the two. They see how blockchain relates to crypto, how those topics go together, and are really involved with both those topics. Yeah.
Mm-hmm, mm-hmm. How much of this fascination do you think has to do with this huge run-up in 2017? How much of it has to do with that versus more of the understanding what it can actually do for us in the long run?
I think the hype 2017 was really important for the space in the sense that it got a really visibility. So before that, and even before 2016, we're just I'd say a couple of nerds, and I mean that in the positive sense, that were looking at technology and really loved what it was able to do. And they, just because they loved technology, they contributed to it, and that brought a huge effort to bringing that technology forward. And then a couple of new players entered, say in the last two years. On one side, there were corporates which looked at the technology and made research on it, but there still are quite a bit focused on how they can keep their current situations and how can they keep their current processes and make it a bit more efficient. So we often see that corporates do not yet see the really big picture of the technology and how it can disrupt everything. And then you had startups entering the space, which I believe is really important. And I think that's the big thing that changed in 2017, that now you have really a lot of startups, a lot of cool startups trying to build on the technology and bring it further and really look for business cases and try to apply the technology in a business sense as well. And I think that's really important for bringing the whole blockchain space to the next step. I think a lot of the startups will fail, definitely, as any other startups in any other space. But it's really important having those experiments and those projects happening all around the world, because they are building on the existing technology and are bringing it further and are improving on it.
Mm-hmm, mm-hmm. In your view or in your experience, has this interest, right, from, let's say, the traditional financial sector or traditional funds in this space, and of course they have deep pockets, right? They're looking at investing billions in this space, not just 10,000 Swiss francs. So has this somehow changed maybe the approach that startups take to conducting their business?
Yeah. So when you're seeing how much how much money flows into those startups via ICOs, and those are not really, sometimes they're institutional investors, but there's also a lot of retail investors. And those startups are really able to raise a lot of funds, which in my opinion, honestly, is most often too much. So as a startup, in my experience, it's not good to have too many funds. If you have a couple of millions and you do not have more than an idea, you're going to spend those millions the wrong way. It's really important that you're scarce on money when building a startup, because then it really pressures you to focus on what you're doing, and that brings you further. So for me, I'm a bit there are two sides to the story. So on one side, I really love seeing how much money flows into the space and how much is going to be how much as companies are being able to do with those funds. But on the other side, I'm quite critical whether those startups will be able to execute if they have too much money on their hands. And we do not know that yet, because I believe we haven't seen something like that before. And those startups which raised quite a lot of money, they now have, I'd say, a couple of years till they run out of cash. So we're not going to see the consequences this year or even next year. We're going to see them more down the road. But I'd assume that quite a few of those startups raising a lot of money now won't be able to deliver later. So we prefer those projects which try to keep it a bit small and try to really raise only those funds which they know they need, and then implement on that. Yeah.
Mm-hmm. Mm-hmm. What do you think are some of these consequences that you mentioned before of all this institutional money flowing into the space?
So when institutional money flows into the space, that's generally a good thing, because it brings in some professionalism, it brings in more regulatory oversight in tendencies, and it also it lowers volatilities. So you see that with tech stock as well. As soon as you have institutional investors entering the tech stock space, volatility, the risk of those assets usually drops. So that would be one of my wishes for the future, is that when we see those institutional investors entering, that they are helping further develop the space and making a bit more professional. I also believe that they're going to have a more stringent view on which startups are really going to get some money. Now it's possible to have a white paper and nothing behind it and raise a couple of million. I cannot believe that when institutional investors are really in the space, and in Europe they aren't really yet, they're just entering now. When they're really entering the space, that there will be more focus on that only projects which really have some business foundations behind it, that maybe already started the projects and can show some technology, that those projects are going to be the ones receiving the funds, and not those just having an idea on the white paper.
Let's take a quick break for a message from our sponsors. Crypto Storage is part of the Crypto Finance Group, providing services for professional financial intermediaries and therefore bridging the gap between traditional markets and blockchain technology. The storage solution offered by Crypto Storage raises market standards by introducing a new security paradigm, which features 2 layers of dedicated and redundant hardware devices. This setup allows for a dedicated, independent, and highly flexible multi-signature framework. All transactions can be independently reviewed and approved on a dedicated tamper-proof hardware. The hardware security module, the tamper-proof signing devices, and the tailored software solution are all developed by leading Swiss providers with vast experience in finance and IT security. To learn more, visit www.cryptostorage.ch. If somebody has a startup and looks for investment or wants to be attractive to an institutional investor or another professional big investor, what do you think should they do?
They should really start small and start executing on the idea. So instead of spending too much time theoretically thinking about the concept and the business idea and writing white paper, they should, in my opinion, should start executing on it and start testing it, start talking with people, potential users, and really see whether the thing they want to do, whether that really makes sense. And once they know, okay, their idea makes sense, they should start building it. They should start implementing the technology. They should gather a team which is really diverse and have really tech know-how in the team as well. And once they are able to have to show something like a minimum viable product and show, okay, what we are doing really makes sense and it works, then they should go out and raise some funds. And really focus on the team, bring a team together that's good, bring the technology to a level that makes sense. Also involve the ecosystem really early on. I think especially for those blockchain projects, because it's all about collaboration and communities, it's really important to build up this community really early on.
Mm-hmm. And of the companies you look at, I mean, how many are doing this and how many others are still in that other, ICO paradigm?
Yeah. So it's rather the minority that's doing it how we would like to have it done. But in Switzerland, we see a couple of really nice projects which are doing it like that, which really focus on the community, on building something that has value. And I think we're going in the right direction, because those are the projects that are really the ones that are seen as successful in the industry.
So you're in Switzerland, and did you look at other places to start your own company as well?
No, actually not, because I am really based in Switzerland. I have my family, friends, and everything is here. I have lived abroad for some time before, and I really liked being back and starting something here. And it was quite a luck to have a financial industry which is big in such a small country, and at the same time having this blockchain community in a small country like Switzerland, which is really big also in an international point of view. So for me, it's actually perfect being able to be based in Switzerland, but still work in a market which is internationally quite at the forefront.
Yeah, I mean, you already mentioned that many things align in Switzerland. I feel very similar, right? I mean, I've been away from Switzerland for more than 15 years. And just in the recent years, whenever I came back, I was very much surprised by the level of startup energy and now this whole crypto and blockchain movement that started here. And I thought it was really the ideal place, actually, to start projects like these in this space. How do you feel about it?
Exactly the same. It combines different things. Switzerland combines different things which are really valuable for starting a company in the blockchain space. So you have a lot of know-how here because of the universities. You have quite a lot of financial capacities in the sense of you have the banks, you have a large financial industry, but you also have quite some funding capacity to really start those companies. And another thing which is often forgotten is, and I believe is really important in a startup space, is the willingness to collaborate with partners. So when we want to talk with someone in a bank, for example, or at some investment advisor or in another startup, we just write them, and usually you get an answer. I've heard different things of different countries where it's like much more difficult to really get to the decision makers within large companies. But in Switzerland, those large companies really want to be involved with startups as well. So if you have a nice idea and if you ask nicely, you usually get to the person you want to get to, and you can pitch your idea. And if you do that good, you get some nice collaboration opportunities out of it. And that's Switzerland. I'd say it's really great to have that.
Mm-hmm. Mm-hmm. Cool. Have you seen any downsides too?
Well, it's obviously the costs. It's really expensive to live in Switzerland. And so if you do not pay salaries in a startup phase early on, you somehow have to manage your own assets. So either you need to have some savings or you have someone supporting you in order that you're able to really do it, because you have to pay your rent and so on. Mm-hmm. But I think because if you have if you had a job previously and you have a high salary level in Switzerland, it's also really I'd say it's easy to some certain degree to save something if you really want to start something on your own. So if you have a nice salary and everything, then I think it's the most important thing is to save as much as you can. Then you really get freedom to quit your job and start your own business. And then it's also possible to do that in Switzerland.
Yeah, I mean, it really looks like Switzerland has become some ideal startup country, right? I mean, who would have thought?
Yeah. But I think it's also all the partners that work together. So I have been involved in the Kickstart Accelerator before, and there you really saw it. You have governments, you have corporates, and you have startups all really willing to collaborate and work together. And you also see it now in the financial industry. You have large banks that want to collaborate with startups, but you, for example, also have FINMA, which really has an open mind towards new ideas. So now in the crypto blockchain space, they could have come and say, okay, ICO, we don't know that yet. We're just gonna stop the party. But they really see the potential behind it, and they said, okay, let's see how we can allow that potential to grow, but still have certain boundaries. And they did that really nicely. And that's a really nice example how also the government helps support those startup industries.
Cool. There are several professional crypto asset management companies coming up now in Switzerland. I mean, globally, of course, but also here, there's several. Is there intense competition in this space, or how do you interact?
We do not really see the competition yet. If you compare it to the traditional asset management industries, you have around 2,500 asset managers in Switzerland alone competing in the equity space. So apparently there is room for a lot of asset managers, even within the small countries. Now in the crypto space, you have a couple of players in the States, but in Europe there are just the first few coming up. And in Switzerland, there's say a handful of players like we are, which is compared to the 2,500, it's tiny. And we know all of them. They're actually quite good friends, some of them. And we really collaborate because we are facing the same problems usually. And currently, and I'd say that's going to stay for quite a couple of years like that as well, it's more collaboration than competition. And everyone has a bit their own strategy in the sense of, so some are more on the passive side, so saying, okay, we just want to give access to the crypto space. Some are more on the trading side, so saying, okay, we want to do like arbitrage trading strategies and really look for those inefficiencies within the market. And then our companies like we are, which are more like really research-based, more looking for long-term company investments. And so having those handful players in Switzerland with those different strategies, it's really not that big of a competition. It's more really some friendly phrases you see, and you try to tackle the problems together.
Cool. Also, that quite a difference, right, from the traditional financial sector.
Yeah, it's less competition. Yeah, because now you have a lot of demand for what we are doing, and not a lot of offers. Whereas in the traditional sector, you have a lot of offerings. You have a lot of asset managers, a lot of banks, and the demand is decreasing. And for us, it's just the opposite. And we're really trying to push that forward as long as we can. That's going to change at some point. I'd assume that you start more towards competition. But now it's really nice to have it like that, and hopefully it's going to stay like that for some more years. It's also more in the sense of this whole blockchain topic anyway, that you have more of a collaboration, decentralized approach where people need to work together to really achieve something.
Do you get much interest from people who used to be in the traditional financial sector and just recently said, this really fascinates me, this whole crypto asset space, I want to get a job there? Do you get applications from them?
Yeah. We see a lot of interest. So we co-founded the company, 5 of us, and my 4 co-founders have all banking backgrounds as opposed to me. And they have a lot of friends in the banking world, and so many people really do not see a perspective within their jobs in the banks, and they would like to do something outside the banking sector. And the blockchain sector is obviously something that really sparks their interest. So for us, it's a really great thing, because once we're going to scale, once we start hiring people, we have this pool of really great people which are currently working for banks but really want to get out and build something on their own. Because in their jobs, even though those companies are great most of the times, and they really try to push their employees forward, they are really in a stringent approach in terms of what they're able to do. It's difficult to have innovation within those large corporates. It's difficult to bring new things on the table, because you have a lot of, on the technology side, for example, you have a lot of legacy system that you have to consider. You cannot just start on the green field and build something new. And that's what a lot of those people working in the banks now really would like to do. So for us, it's a great thing, and we believe it's going to be quite okay to find people working that would like to work in this sector.
You mentioned before that one big new skill that people need is the technical understanding of how blockchain works, how cryptocurrencies work. What else do you think are skills that people should develop who want to leave the traditional financial sector and enter the crypto sector?
Well, definitely the know-how on the space. So that implies who are the players, how can I trade those assets? And that usually starts with buying their own assets themselves, because then you learn it right away, and really get an understanding of how those markets work. Because some things might be different or might be similar to the traditional financial markets, but a lot of things are different as well, and you really have to realize how those things work differently, and that's best by trying it out yourself. And then the other thing that's far away from crypto or blockchain, but it's if you want to go to something smaller, to a smaller startup or start your own business, it's a totally different business mindset. So instead of having a task that you have to do, you suddenly have an empty sheet, and you have to start writing down your own task. You have to start being able to figure out what to do next. And that's totally different to being in a big corporate. It's a great thing, but that's something that has to be learned. But it's usually you learn it by doing it.
Are there maybe cultural things? You already said that people need to be more maybe self-starters, and they need to understand that they're working in a startup, in a small company, and they don't have an HR doing everything for them. But what are maybe cultural things that people just where they need to learn more than just about technology?
One thing I often see, and that's maybe also my background from St. Gallen and my friends having their backgrounds sometimes there as well, but this need to always do what's best for your CV. So whenever you start a job or go to your next job or during your studies to an internship, you always have this mindset of what do I have to do that is good on my CV? And I was doing that as well. I did a lot of internships during my studies, and then had a good job after university. And then when for the first time going from a big corporate to a small company, a lot of people are asking me, "Why do you do that? That's really bad for your CV." I was just doing it because I liked to do it, and I didn't really think about that too much. And then just after, I'd say after a couple of years, I was thinking about it, why I did it, and why it was good that I did it, because it was for the first time I stopped doing it for the CV, and it's really because I was realizing when do you end working for your CV. So it might be when you're 60, for example, then you might stop working for your CV. So if people stop having this idea that they need to have something that looks good on their resume, then they really start doing what they really love to do. And I believe that's when you do what you're really good at. And it's a mindset. But and I'm not sure if it's just because at business universities, you get that picture that you have to do all those things that are good for your resume. But once you realize that and you stop doing it, then it gets really fun.
Cool. What are some interesting projects you've seen lately? I mean, not by name necessarily, but by an innovative approach to using this technology.
I think one really important area where I believe the technology is going to play an important part is in the whole identity management space. So we are not really, a lot of us are not really aware how to use their data reasonably. We share our data quite a bit, and I include myself. I'm using quite a lot of tools which I actually know I shouldn't use, but still use because it's just more convenient. And
you mean these tools? You mean Google and LinkedIn and those things?
For example, so you have a Gmail address, you give a lot of data to Google there, you have Facebook and so on, and you have LinkedIn. But it also starts with having your Cumulus card in Migros. So you give a lot of data away all the time and during every step in your life. And I think blockchain technology allows us to get back ownership over this data. And I'd love to see some projects, and you see certain projects which start in that space that really help you manage this data and be owner of that data again. And if you want to give that data away, that's okay, but then at least you can sell it and get some money for it. I think we're going to see hacks. We're going to see even more hacks in that data space, as we saw now also with Facebook, where data is misused. And that's going to bring back this awareness about your own data. And hopefully the blockchain space is going to have some tools for it, how you can manage your data more reasonably than we did that till now.
Mm-hmm. What are things where you thought this is maybe a little bit too much of a moonshot?
We hear a lot of things that, it's going to get rid of banks, for example. I believe banks are going to stay, for example. The technology itself would be able to get rid of banks, but they have other important roles than just being the middleman. And so I believe banks are going to stay in different functions, but we are not getting rid of them.
I mean, there was this famous paper, right? The banks as keepers of secrets.
Yeah, that's actually a good example, because in our business, for example, we looked for a banking partner for storing the assets, because we ourselves, we haven't been in the business of storing valuable goods. We do not know how to do that. We do not have experience in that. We didn't want to set up the processes for that. But banks, they know how to store valuable things since decades. And if they can take over that that role also in the crypto space, they're going to do that. At some point, you do not need someone storing those assets anyway, because you could do that decentralized as well. But for some like middle term perspective, definitely banks could also play an important role in that space, the crypto world. But I also think banks are always going to be an important player as party that you can consult when you make decisions. So, for example, if you want to have a mortgage and it's your first mortgage, then you still want to talk with someone. You might not need the bank for the mortgage itself, because you could that peer-to-peer, but you still want to have someone that advises you because you are not knowledgeable in that field. So if banks manage to keep this client relationship and advise them and be their trusted party in that sense, they could still be a valuable player.
Interesting. Before you also said that you don't necessarily believe that Bitcoin will replace traditional fiat money. Where do you see the Bitcoin use case?
I see it in two regions, or say in two use cases. One use case is just an alternative currency system, which is especially on more third world country regions where you want to have an alternative currency. And that's a bigger part. I see it as a store of value at some point. And there I'd say it's most likely, if it replaces something, it's most likely to replace to a certain degree something like gold. I could never imagine holding gold in my portfolio. I do not see the reason for it. And I believe that a lot of people think similarly than I do, especially younger people and people that never knew a decade without digital tools. So all those generations coming up, they might hold something like Bitcoin for having a store of value in the long term, just to have a security in the case something terrible happens, as a lot of people are holding gold now. It might be a really small likelihood that something happens to your government, but still people want to have this kind of pockets they can go to in case something happens. And I believe Bitcoin can be an important player there.
Mm-hmm. What do you think should professional investors in this space, what should they understand about crypto assets that they currently don't?
That we are really in the early stage right now. We saw it in December when a lot of people wanted to buy Bitcoin, and we saw that it's not yet scalable, that transaction fees are really high. And a lot of people were saying then, okay, we told you it's not going to work, Bitcoin is useless. But it's the wrong approach, I believe, because we are in such an early stage that it is not yet meant to be used by so many people. You could compare it with, for example, Napster in the early days of the internet. When you downloaded a song via Napster, that took one song one night. That's not even usable, that's not user-friendly, but still we did it because we just wanted to have that song. Now we have Spotify, which you can just stream every song you want, but it took 10 years to get here. And I believe Bitcoin is in that stage right now. We have a really great technology, and it's going to be amazing once it's fully developed and fully scalable, but it needs some time, and we need to get the industry that time to go there and be technology really secure, and that just needs some time. And a lot of investors do not understand that. They just see, okay, it's not as scalable as Visa is, so it cannot be as good as Visa. But they forgot the big picture. They forget that the potential of technology is much bigger than the traditional systems.
Mm-hmm. So that's more the currency aspect, right? The Bitcoin aspect. But what else maybe beyond that? Before you said the valuable thing will be these new networks. What about them are maybe misconceptions that are quite common still? I
think it's really difficult for all of us to really grasp the potential of the technology, me included. I cannot imagine any application that's possible. I just know there are going to be much more applications than we can think of now. It's going to replace entire industries. For example, audit firms now having like specific audits you do on companies and look at individual records. You're not going to need to do that anymore. You're going to have like entire systems which are screened in one go. We do not need to look at only certain aspects of an accounting system, for example. So we have entire industries that are going to be replaced, but there's still going to be a lot of people needed to look at those systems, to implement those systems, to look for the interfaces between the different tools. And sometimes I believe it's underestimated what the technology is going to disrupt, just because we are not able to believe or not able to imagine what is possible.
As an investment advisor or also as an entrepreneur, who are your role models?
I'd start with my parents. They both had companies themselves. And so I always grew up in a really entrepreneurial family. And for me, it was great to see the passion they had for their companies, and at the same time also the flexibility. So I always thought it was hard to build up a company, but at the same time, they never complained because they did what they loved to do. And so I say they're my biggest role models in building up companies. And then you have those founders all throughout the space, especially in the blockchain space. And now in the Swiss blockchain space, you get to know a lot of them, which are really passionate about what they are doing. And that inspires you every day to work on your projects, because you're going to have like bad days every now and then when nothing works and you tell yourself, okay, what you're doing here doesn't make any sense. But then again, you see your own passion, you see the passions of the people you work together, and you know, okay, it's the right thing to do. Yeah.
Cool. I mean, let's imagine Satoshi had never written that white paper and there was no blockchain and no cryptocurrencies. What else do you think would you be doing?
I never thought of that. I believe I would still have my own company. I believe there would be something similar like a blockchain. Might not be a Bitcoin type blockchain, but I think that all those smart people involved in bringing further any technology, they would have come up with something in that direction, because this whole idea of decentralization is something that's really in the community, and I believe that's not Satoshi only or the group around Satoshi which coined that, but that's the whole tech industry and the whole people passionate about bringing technology forward. You just see that with having open source topics. So a lot of things are open source in the tech space, because you know that only when you collaborate on it, then you bring it further. And that's why I believe something like the blockchain technology would have come up eventually. And believing that I would have been in the entrepreneurial stage by that time anyhow, and being involved with something with tech, might not be that different to what we are doing now. For us, it's always really important when we are talking with people about the whole blockchain investing part, is that they realize it's investing in really early stage companies in a really specific sector, but it's a sector that can disrupt every industry. So it's on one side, it's high risk investing. On the other side, you are involved with a technology which is going to change the world, and we are totally sure about that. We do not have a doubt about that at any day. It's going to change the world, and if you want to be involved in the space, you should start now and really add your thing to it, that the space can go forward.
Yeah, that was very inspirational. Thanks so much, Lidia. I really enjoyed talking to you, and thanks a lot for taking time today.
Thanks a lot for having me. It was an absolute pleasure.
Thanks so much for joining us today. More info on our guest and our sponsors is in the show notes of this episode and on the podcast website, theblockchainandus.com. To help people find this podcast, it's important that you download, subscribe, and give it a top rating and review on iTunes or on the podcast platform of your choice. I'm Manuel Staggers, and I thank you very much for listening.